Good morning, traders. Today is Wednesday, June 23rd. My name is Charles, and this is the Pirate Traders live stream. Okay, I just thought I'd start off this morning giving myself a bit of a step back and looking at the daily candles here. And I just making note of the fact that whilst we did break through the 50 moving average a few days ago, which was bearish, the next day, not only do we pull above that 50, we pulled above the 20, and then yesterday found support at that 20 moving average. So that's sort of an indication that bigger money players may have stepped in at the 50 here. So that's bullish to see. Pretty much across the boards this morning, things look good to me. They look bullish. Obviously, it's too early to say. We're opening inside the previous day's range, so we expect that we're going to have some chop here for the first half an hour, hour of the day, and the market will need to figure itself out before we'll be certain of what direction it's going to start moving. But this is bullish, guys. This is a continuation of this momentum trend that I spent all day yesterday talking about. Literally, this is the same movie as yesterday morning, right? We pushed higher, spent the rest of the day balancing up at higher prices. Overnight, balanced to slightly higher, but didn't really pull back down into any of the single prints or weakness below. Okay, same thing yesterday, right? Started off the day down here, pushed higher, rotated, getting acceptance above those higher prices, then had a spike up at the end of the day, and the overnight just balanced slightly higher inside that spike up. Okay, they never even came down to test any of the weakness in the single prints down here from the first part of the day. So that makes me think that these single prints aren't weakness in the market. They're a sign of change in the market, right? They're a sign of the bulls, being in charge. So to me, all of this feels like good, bullish momentum. And so I want to go into the day this morning keeping that in mind. Okay. So the market is likely to have chop. It opens in 1 minute. We're likely to bounce around here in the morning. The first support is going to be the base of the spike right here at 4332. Okay, that's going to be the first potential support. If not, half back and the base of the D period single prints are the next support. Then the C period single prints, and then this node of volume from the day before yesterday. Okay, so if any of those act as support for the market, it sells down to those levels, starts grinding around and finding support there, that would be a good long trade in my mind for that continuation higher. Okay, to the upside, obviously a breakout above yesterday's high would be very bullish. So what does that mean when I say breakout? I mean the price pushes above, then comes back down. You wait for it to come back down, comes back down, and then it finds support at that high. Okay. Targets to the upside, the poor high from 615 and the all-time high that was created in the overnight market at 42.58. Okay, both of those are well within range for today if the market is bullish. Okay, market internals opening a little bit bullish, mildly bullish. But again, they need a good half an hour to sort of settle in. All right. Good morning to R.K. Leon. Welcome. Jimmy Woo, good morning to you. Naif back with us. Good to see you. Luca is here. Good morning. Shane back with us. Good morning to you. Malcolm is here. Dave, first time, worth checking it out. Oh, yeah, Dave. Dave, you've come to the right place, my friend. Smash that like button. Welcome. Nav Trader back with us. Good morning to you. Thank you, Luca, for the support. Sean Franco, good morning to you. Nor Auto Trading is with us. Philip is here. Marco back with us. Yep, absolutely right. Either one of these volume nodes could also act as support. And so the base of the spike being right above the POC from yesterday and that node of volume around it makes this very good support down here. Okay. Stanley, good morning to you. Jose is here. Good morning. Lewis is back. Good to see you. Jimmy Woo just joined this week. Well, we're happy to have you, brother. Okay, so here's that chop. They're giving us some chop, chop, chop this morning, as we expect. Ricky Bobby back with us. Good to see you, brother. Chris as well. Good morning. The Flea in the house. Good to see you. Nirmal is here. Good morning to you. And Mediterra back with us. Mediterra seeing a potential test of that all-time high and then a fail. A pullback could happen. Nick, good morning to you. New subscriber, Dave M. We got you. We got you in the first 5 minutes. Thank you, brother. Welcome. So for those of you that are new to the channel this morning and who don't have any clue what you're looking at, and you're thinking to yourself, is this the Matrix? What on earth am I looking at here? This is market profile software. So essentially the way that it works is it's the same thing as the candlesticks that you're used to seeing. It just takes the same information and it displays it in a three-dimensional way so that you can see time, price, and volume all at the same level, right? So we can see time. If you look over here, this profile, actually, let me get my drawing tool up. So if you look at this profile here, which is the overnight profile, so this is from when the market closed in New York yesterday until it just opened just now, all the trading that the ES did in between, okay? So let's just for a second look at this profile and use it as an example. You can see by the number of letters that run across how much time the market spent at each level. Okay, so each letter represents a 30-minute time period. So think about it like a 30-minute candle. Okay, so when you see the more letters that you see running across at a certain price level, you recognize that the market spent more time trading around that particular level. The volume over here on the left, this column is the volume. So again, this is measuring the volume that's traded in this profile. So from the close of the market yesterday to the open this morning, right? That's what's being measured in here. The individual numbers show you how many contracts were traded at that level. And then the colors and the candlesticks that you see running along here, those give you an idea of the amount of volume visually, right? So the bigger the candle, the more volume, and the darker the color, the more volume, okay? Over here on the right, this is the profile for this morning so far for the trade that we've had since the open. And it's too early to show it right now, but what I've got going here is two profiles side by side. Actually, I'll just do this one for an example. So basically, I've got two side by side like this. The one on the left is expanded out. So as we go through the trading day, you'll watch the one on the right develop like this, forming a shape that shows us the shape of the profile. And then you'll see the one on the left over here is showing us each 30-minute time period, how it moves throughout the day. The blue shaded in box that you're looking at right here, that's what we call the value area. Jim Dalton, who is one of the pioneers of this software, he says that as traders, we should trade value, not price. Okay. The actual price, the yellow line that's showing you where the price currently is at the particular moment, that's just an advertising mechanism, right? That exists just to trick your brain into entering trades. It pushes higher this morning after the market opens, and it gets lots of people excited, right? There's bulls that are excited because they think we're going to go up here and repair this poor high, so they buy up at these prices. And then there are bears who think, oh no, this high is going to hold and we're going to push lower, so they sell right here. So the price had to push up to that level in order to bring in that business, in order to convince those buyers to buy there and those sellers to sell there. But it doesn't matter, right? We can see it doesn't matter because look, it just pulled right back down to here. Just a minute ago, the market was worth 42.42. Now it's only worth 42.38. So that price doesn't mean anything. It doesn't matter. So we ignore the price, okay? We focus on value, which is the blue shaded in box, because value represents 70% of the trade that's taken place. It's a much stronger indicator of what the market is really doing. It's very easy to push the price up and down. It's very, very hard to push the value area up and down. So that's why this morning I came in feeling so bullish, because over the last few days, value has consistently been higher. Okay? So the overnight, the value was overlapping to higher. Then we had higher value the next day, overlapping to higher in that overnight, higher value the next day. And then yesterday, value was inside the overnight, or last night, the value was inside yesterday's range. So that momentum is kind of slowing, right? But it is still going. And we know that because value yesterday was higher than the previous day. Core, do you need data to use market profile? It depends on where you get your market profile software. The software that I use is from a company called Window Trader, and you have to pay extra for the data. But you can use platforms like Thinkorswim or other platforms. In Thinkorswim, it's called Monkey Bars. Just Google how to set up Monkey Bars in Thinkorswim. All the different brokerages and companies have some version these days of market profile. And so if you use one of those, you don't have to pay for data because you just use the data you're trading on. But yes, if you want this particular company, you have to pay for it. John, that's good luck. That alarm is it's actually your bank preparing for all the money that's going to come their way. Mudra, good morning to you. Now, if you feel the opposite of me, you feel like the alarm going off is a bad sign. It's the universe warning him to get out of the trade. Okay, so currently the first place that the market found support was right here in this node of volume that we left behind at the end of the day yesterday. So that's a first indication that things are good this morning, that they're strong. The first place within yesterday's range where buyers might step in, they have. So that increases the odds that if the market does need to push lower, they will step in at the base of the spike, they will step in around the POC, they will continue to step in. So this is a good sign so far. Not great taper though at the low. So the market will probably need to push down there again. Tommy, welcome Tommy. Thank you for the sub, brother. Oh, Naif, you're saying before he deals with the alarm, close the trade? Yeah, good call. Mine was a joke. Yours is actual real advice. Dave, yeah, I use the market internals as well, which you can see over here on this screen. That's the breadth, the advancers versus decliners, and the tick charts for the NYSE and the NASDAQ. I don't use them as much. I'm pretty much just looking at the profile. And I've just spent so long studying the ES on this profile day in and day out that I can pretty much sense what's going on based just looking at that. And then I often get ideas of what I think is happening from this, and then I verify them based on what I'm seeing in the internals. As of now, still just the morning chop. Market's trying to figure itself out. Matt Cooper, you've got me so confused. What's happening? News is coming out? News? 309? Oops. I don't know what any of this means. Okay, so another sign that buyers are stepping in here. Both of the ticks bouncing off the zero line. Oh boy, 30 seconds, Matt. Just for those of you that know, Matt might be new here. I don't pay attention to news at all in trading. If there is a big announcement, like something from the Federal Reserve, or if like a big company like Apple is reporting numbers or something like that, I want to know that there are news events happening, but I don't actually care what the news says. I've just learned from experience that you can't really judge you can't really take a trade based on a news event until after it's taken place, because oftentimes the market can react randomly. So like, let's say the news is good news. You would think, oh, well, it's good news. The market will go up. I should buy long. But then you'll do that and the market will sell off instead. So there's no way to take trades based on the news. Why even pay attention? Instead, I've just learned to see it happen in the charts. So now if some news announcement came out at this moment and some crazy things, the market started to react to it, I would see what's happening and know just from watching the chart. I don't need to know what the news is. It's a concept that we call pursuing market-generated information, right? That information that comes from the news or from announcements or from, press releases or whatever, that is not generated by the market. Market-generated information is information that you see in a chart. Yeah, Matt, you're more than welcome to post it in the chat. I'm just giving people my 2 cents on it. Okay, so now on this next push, what I'm asking myself is when the market comes back down here to where the where it is right now, will it find support here or does it need to take another push down? If it seems like it's good here, it's not going to go any lower. When it starts to push back up, that will have me feeling pretty bullish. Okay, so there you go. Found some support, short term right in there. So it does feel like it's buyers stepping into this market. Yeah, Dave, what you're talking about, that's just a totally different way to trade than I do. I'm all for it. I think that's great. I just don't look at markets that way. I'm an intraday trader who trades the ES and only the ES. So all I'm thinking about is what is this market going to do over the next hour or two. Beyond that, I don't worry about anything. So once again, guys, in terms of looking for trades, anything inside of this area where we're trading now, I wouldn't touch personally because you're likely to just continue to get chop. For me to get into a long trade, I'd need to see the market push above yesterday's high, okay, and then pull back down and find support there. And then when it found support on the pullback, that's where I would go long for continuation to the upside. Or if the market pushes back down and finds support in one of these nodes, either this node of volume where we're currently finding it, or the repair of the single prints at the base of the spike, this node of volume below that, halfback, so on and so forth, working our way down. So any of these levels where it finds support, I'm happy to go long, but not in this area because this is the morning chop. Okay? $102 people watching, 32 likes. Please smash that like button if you don't mind. If you have it in your soul, if you can see that thumbs up, click on it. Really helps the channel. I appreciate you. I'll drop the gauntlet once again today to the live chat. If we can get above 75 likes in the next half an hour, I will stay with the stream for the rest of the day. There they go. There go the likes. Yeah, boy. Normal, it's not a matter of recommending taking trades during the chop. It's just that, because here's the thing, there are people that all they do is take trades in a day like today, right now. Like they'll jump in this morning, they're scalpers, right? They went long down here, they covered up here, they went short for the way back down. I mean, they're just like, they've taken 10 trades already this morning. And by, an hour into the trading day, they're done for the day. There are people who trade like that. So if you're one of those people, if you're a scalper who can trade a very fast moving, erratic market, then jump in, man. Then seeing that we opened inside the previous day's range, inside the previous day's value area, you should be licking your lips with excitement to get in here and trade this. But for me, personally, for Charles, I don't trade this because what happens to me is I enter a trade and then the market chops and I exit at a loss, right? I go long right here. Market pulls back and I go, oh no, I'm wrong. And then I exit the trade. Then it pushes back up. Well, now I'm angry. So now I like revenge trade. Oh yeah? Well, now I'm going to enter it again. And I enter that trade again. And then it pulls down again. And I'm like, ah, fuck, they get me again. So I exit again and then I lose money. And then it pulls back up and I'm like, now I'm even more angry. And I'm like, you motherfucker. Like, and so I enter my trade again. You guys catch the pattern of what's happening here. So for me personally, I've just learned through experience to let the market do it. Let it grind up and down and up and down and up and down. And I know what levels to watch for when it's going to change, right? For when it's done exploring price and it's ready to go to a new place. So I just wait. I just sit here and I watch it go up and down and I just wait till it gets to one of those levels. Then I participate. It's a matter of managing my own emotions. Absolutely. Less stressful. Jim Dalton always talks about there are two types of capital that a trader has when they go into the day each day. You have your actual capital, your trading capital. That's the risk, the money that you have to risk. And then there's your mental capital. That's sort of the energy that you have to think throughout the day. And if you waste it all in the first half an hour of the day freaking out over, do I go long, do I go short? Is it when you already know it's going to go up and down and up and down and up and down. You know there's going to be chop because you opened inside the previous day. So why waste mental energy trying to make guesses in this? Save it. Save it for later when the opportunities present themselves. Mediterra, I have no fucking idea what you're talking about. All right, let's jump over and take a quick look at the Q. The good old NASDAQ. Yeah. Okay, so just as we're zoomed out here on the concept of momentum, you can just see values moving higher consistently. That is very bullish to see. The market clearly broke out of a trending, a sort of balancing area that it had been stuck in. So that is bullish as well. They are also about to test the overnight high, which is more bullish than the ES, but only slightly. Okay, ES pushing higher here. So this is very bullish to me. Remember I said because there was only 61 contracts at the low here, the market probably needed to come down and do a little bit more two-sided trade down here, bring in a few more buyers before it'd be ready to move higher. But it did not, right? It just kept coming down and finding support right in this area where the overnight did, and then pushing back up, finding support, pushing back up, finding support. So that is a what I would call a when what should happen doesn't. We should have come down and added some more volume here. So the fact that we didn't is bullish. Marco, the ticks, not so good. No, ticks look great. They're all closing above the zero line, and every time they've started to pass below the zero line, they've pulled right back up, just leaving a wick. So that is bullish. The breadth is slightly above the zero line and trending higher. That's bullish. The advancers versus decliners are below the zero line, but they're starting to trend higher, right? They found a low, and now they're making higher lows. So the internals look good. Ooh, 30 minutes and we only need 10 more likes. I think we're going to do it today, guys. I think we're going to stay here together on the YouTube for the rest of the trading day. There must be certainly 10 brave souls willing to push that like button. In case we've created a poor high here in the B period. It's poor because it's only one tick from the A period high. You need 2 ticks for it to have what we call good excess. When you create a poor high like this, you often push away. Okay, the market will kind of push the opposite direction, but then it almost always comes back to repair it. That is to push 2 ticks higher. So this is actually bullish to me. Even though it's causing the market to push away from it, it is actually bullish because it will increase the odds the market's going to come back up. Now, the tricky nuance with a poor high that should be noted is it doesn't have to be immediate. You can create a poor high and come back to repair it days later. For example, on 6/15, we created a poor high, and here we are over a week later, and we still haven't repaired it. But guess what we're doing today? We're probably going to go up and repair it, right? So poor highs are very powerful things to see in the market. They almost always, or I guess you could say every poor high that's ever been created has been repaired, but almost every poor low gets. It's a very powerful signal. There you go. We reached the 75 likes. Imagine it's a video game and you just won, like a big thing exploded on the screen. Yay! You achieved your goal. All right, guys. Well, I'm going to stay with you here on YouTube for the rest of the trading day. So let's learn some stuff. Let's make some money. Let's have some fun. Let's get some jokes going in the chat. Nav Trader Charles, what's the green arrow at 4230 on your TPO chart? Down here. That is to show a gap. Okay. So the way that this software is set up, it shows gaps between time frames. So this is a gap from the overnight of 2 nights ago to the overnight of last night. And then it's green because it's a gap up. If it were a gap down, it'd be a red arrow. I don't look at the overnight gaps at all. I completely ignore those. But if you have a gap from regular trading hours, that is very important to see. Okay, so once again, short term finding support here in this same node of volume, right around the POC. The POC is this where you see the little blue or greenish B. That stands for point of control. So you could see yesterday our point of control was down here. Point of control is the fairest price to do business. So if buyers are stepping in and buying at the fairest price to do business, we must assume they think that that price is going to be higher later in the day. Malcolm, the outfits. Bro, are you watching me? How is that happening? Design Knob, it's a great question. So Design Knob is asking, why exactly do gaps need to be filled? Why do areas need to be repaired? What makes it do this? Well, the truth is, I don't know. It's one of those, mysteries of the universe that is currently unexplained. Why do we always fill gaps? There is no, I honestly can't explain it. It doesn't make any logical sense. Same thing with the poor references at the highs and lows. I don't understand why we always repair those things. I was just talking to somebody about this the other day, and I had this kind of like this like light bulb moment where it's like there are certain things as human beings that we invent, right? Like we create them out of thin air. We just think up an idea, try it out, and then we invent the thing. And then there are other things that just exist, that just are, and we learn to, interact with those things. So for example, mathematics, right? We didn't invent mathematics. We didn't decide that 1 + 1 = 2. We just figured it out. We discovered it. Like finding a new plant that's edible, we just suddenly realized there's this thing in the universe called math, which is like a set of rules that everything that exists has to follow. And we have no idea why. Why does 1 + 1 always = 2? We don't know. We just know that it does. It's just one of those things it does. So gaps are like that. It's something we have observed over and over and over again, but I can't really explain to you why. It's just part of the universe. It's like Fibonacci. People that trade using the Fibonacci sequence, why on every asset, on every time frame, over and over and over again, does the market move with this mathematically explainable way? I can't tell you, but we can recognize that there is a sequence and learn to trade studying how that sequence works. Okay, so we're getting up here trying to repair this poor high. Dave, yeah, I don't know what you mean by standard look back period. Are you asking like how far into the past do I look? To be honest with you, not very far. I mean, most days I'm pretty much looking at the previous day, maybe the last couple of days in the case of this morning, like when there's a trend. But what you have to understand is I sit all day, every day watching the market. So I don't really need to look back. I know what the market's been doing over the last few weeks, over the last few months, over the last year. Like I've been here all day, every day watching it. Okay, so the NQ, we're back on the NQ here. And the NQ is now one time framing higher. Okay, what that basically means, a market is one time framing if each time period, so for this, the A period and then the B period, if each time period remains above the previous lows and gets at least 2 ticks above the previous highs. So the B period low is above the A period low, and the B period high got at least 2 ticks above the A period high. So that means this market is now one time framing higher. Okay. Great, Charles. Thanks for explaining that. What do I do with that? So the market's one time framing. Well, one time framing is a really excellent way to know if the market is still trending higher. So as long as this B period low stays above the A period low, you can assume the market is going to keep pushing higher. So when the C prints, if it stays above the B, so on and so forth for the rest of the day. And then at whatever point where you get the cessation, you get the end of that, where let's say the C period were to print and it were to come 2 ticks below the B, we're no longer one time framing. That is a sign that the trend up is over and the market is ready to rotate and just go up and down. So I'm going to start keeping a very close eye on that. Yeah, Malcolm, I'm reading your comments here, and I love your analogy of the window. And I agree with you in saying that the gaps filling um, is because of magnetism. But what is that? What causes that magnetism? Why does an area in the market where there weren't enough buyers and sellers to do business before, why is that always a magnet that pulls price back to it again? That's what's so interesting. What is it that causes that anomaly? Okay, so now the market is one time framing higher. Okay, so far it's been all really bullish narratives, right? Um, we're starting to get a trend down in the ticks here on the Nasdaq, so that's, I mean, it's not bearish, but it's just something to keep an eye on. But internals otherwise look bullish. The market opened, traded higher, only passed back through its opening price once to immediately find support. So that's bullish. Created a poor high and repaired it relatively quickly. That is also bullish. On top of the momentum that the market has been experiencing the last few days, all of this has me feeling very bullish. So I'm looking for the market to get above yesterday's high here at 42.45 and then come back down basically to kind of where it is right now. Come back down here and then find support, right? The candles start to turn red and pink like they did down here. That's when I know the buyers are stepping in for the breakout, right? The first target on the upside is the overnight high / poor high, and then the all-time high up here at 42.58. Uh, 100%, Marco. So I hate getting too nuanced and confusing on the public stream because there's so many people that are new and don't understand. But to make one time framing a little bit more confusing, I have basically figured out recently that you can't trust one time framing in the B period just yet. It is oftentimes the start of the trend, but there have been so many times recently where we've trended one direction for the first hour and then instantly turned and trended the other the rest of the day that I've kind of developed a distrust of the one time framing right away in the morning. But if the C period prints and we're still one time framing, yeah, 100%. I would go long just on that right when it happens. But for me here today, the trade I'm looking for is the push above yesterday's high and then coming back down and finding support. That to me, even if we weren't one time framing, would be bullish. But the fact that we're one time framing as well is just more bullish. Okay, so we pushed above. Now we're pulling back down. Let's see if we can start turning these candles pink over here, which is a sign that we're bringing in buyers. Kathy, which is stronger support, weak or poor lows? Support isn't really the right word to describe a repair of a weak or a poor reference. Repair is more the appropriate word, um, because they're not the same thing. Support is like a level where the market, every time it tries to push at it, it can't get past it. Like it keeps trying to push at a level and it just keeps getting stopped around that area, right? And going the opposite direction. That's what support is. Okay. Weak references and poor references that need to be repaired, it just means the market needs to go down and pass through them by 2 ticks and then they're repaired. So the market can go pass through them with 2 ticks and then keep going. It can go forever. It can pass through them, get 2 ticks, and then turn around and go right back up the other way. Anything is possible um, with weak and poor references. It's just a matter of when you create the weak or poor reference, you're basically just saying the market's likely to come back to that point, but it doesn't have any effect on what the market will do once it gets there. Good morning, Herman. Good to see you, brother. Welcome. Mediterra finding support at 46.50, could target 63. So that would be getting above yesterday's high and finding support above it to target 63. Sure, why not? I would target the all-time high, which is at 58, but sure. I concur. I concur, my good man. Okay, so it still feels like the market is finding support here, but as a trader, I must always have multiple narratives going in my mind. I can't just think the only option today is that the market goes higher, because I could be wrong, right? There's two other things the market could do today. It could rotate. It could just go sideways and grind around here all day, or it could sell off and go to lower prices, right? All three options are available to me. So at every moment, I must be considering, is it that option? Is it that option? Is it that option, right? So right now in this moment, I feel bullish, right? Value was higher yesterday. We've had bullish trade all morning, finding support above the opening price. We're one time framing higher, okay? So I've got lots of bullish signals saying the market's going to push higher today. But this B period getting above yesterday's high and then pulling back in because it didn't find support right here and then push higher again could be what we call a look above and fail of the previous day's range, okay? And so if that, I'm not saying that that's what this is. I don't think that's what this is, but I'm just as an example to teach you how I think. I would start to say to myself, okay, that could be a look above and fail. A look above and fail would likely lead us down to the opposite end of the day's range, certainly down here to repair the C period single prints. So if that's the case, I want to figure it out real soon, right? I don't want to be long because I'm seeing all these bullish signals and and then the market pulls all the way back down to here, right? That would be bad. And if I can get short for a trade to take some of that, I would want to. So even though I feel bullish and I'm positioned long, I'm still aware of the possibility that it could be a look above and fail and it could go against me. Okay, great, Charles, we get it. You're seeing an alternative idea. How do you know? At what point do you recognize that it is a look above and fail and that the market is going to sell off? One time framing, my friends. If this C period low gets 2 ticks below the B period low, that's the cessation of one time framing. And that is a signal to me that this was a look above and fail. Okay? So as long as this C period low stays above this B period low, I will remain bullish and I will stay long. But if if the market gets 2 ticks below the B period, we're rotational. I go flat and I look for trades in a rotational manner. Okay? Let's take a look at the Q. Yes, sir. That is the cessation of one time framing in the NQ, which is now rotational. Okay. The NQ is still much more bullish than the ES. We don't have as much weakness below in need of repair. So I would expect that the NQ will find support somewhere above its opening price, probably around this area, the 14 269 area where the prominent POC from the overnight is, and you got this node of volume from yesterday and the overnight. Market should find support there and then rotate back up to the POC. If it breaks below the A period low, you could be looking at a trend down. Okay, that would be a breakout of the balance and a trend down. ES, ooh, it's right on the edge. Ticks beginning to trend down. Yeah, Ronald. So the A period starts at the New York market open, which for me is 6:30 a.m. because I'm on the West Coast. So it's just each 30-minute period. Okay, one time framing is holding. No, not at all. Normal. It's just 2 ticks is the requirement. Anything beyond that doesn't matter. And just a reminder, the single prints at the high and the low of the day, so the ones that have this green line next to it or the red line, those single prints are not the same as single prints inside a day. Those are what we call a buying tail or a selling tail, and they're essentially just a normal, sign of the two-way auction process coming to an end. Okay, right on that edge, 1 tick away. Ticks continue to trend down. Daniel, the C period low, it's not a poor low, it's what's called a weak low. It's only poor. They're the same exact thing, a poor low and a weak low. The only difference is a poor low or a weak low happens at the higher low of the day. Okay? If it's happening inside the day like this, it's just weak. And in okay, so Charles, you call the one that happens down here poor and you call the one that happens here weak. Why? Who cares? Why give them different names? Well, they function very differently. Weak references, like this weak C period low, they increase the odds that the market will come back and repair them, but not by that much. You can leave weak references behind all over the place. It's not like a huge thing. It's just a very small nuance to notice. And then the more and more of them that you see, the bigger deal they become. If you have 2 or 3 or 4 weak references, then you significantly increase the odds that you're at least going to repair the first of them. Whereas poor references at the higher low of the day almost always get repaired. So it's a statistical probability thing. A weak reference is a little bit of a statistical probability that you'll go there, whereas a poor reference is a very, very high, like 90% probability you'll go there. Roland says that tick is looking a little stronger. Let's take a look. Yeah. The only thing is, though, it's still trending down and it's still below the zero line. So I'd like to see one of those two things. Well, there you go. Just poked above. But yeah, I'd like to see it get above the zero line and spend some time up here or break that trend, right? You get a high that breaks the lower high. That would be good. To me, this feels like a market that wants to go rotational, and those momentum buyers are just desperately trying to keep it going, trying to keep that trend. But the thing about it is, because they're momentum traders, if this breaks, if we get the cessation of one time framing, they're likely to, all these people that went long in here are likely to get squeezed. And so we get some pullback. All right, looks like we're about to get the cessation one time framing. I have learned my lesson not to front run it though. Because you can even get one tick below the B period and then just trend higher the rest of the day. So you got to wait for those 2 ticks. Great question, Douglas. What's my goal for this YouTube channel? Boy, you just picked my favorite subject to talk about. Yeah, I mean, it's been kind of evolving, right? It's been a journey for me. When I first started it, the idea was just to provide a live stream for people to watch the market profile software, because for years I wanted to learn market profile and I didn't, because I didn't want to have to pay. It costs about $300 a month for the software plus the data. And I just didn't want to pay all that money every month. I didn't want that overhead expense. So I just never even tried. And I tried every other thing under the sun that you can get for free from here or there or the other place. And when I finally gave Market Profile a try, I was so blown away by it. I felt bad for all the other traders out there who are still missing the opportunity to use this software just because it costs money. So originally the idea was just, I'll start throwing up a live stream of my screen during the day. It doesn't cost me anything. People can watch it with me. But then the more and more people that started, kind of coming and watching the stream, they started asking questions. Well, what is this? What is that? So then I started answering people's questions and being like, oh, well, this is that and this is that. And I think this could mean this. All right, well, there's 1 tick. We need 1 more for the cessation. And then I kind of realized very quickly that the appetite out there wasn't just for the software. It wasn't just for access to the market profile software. It was for the education, for how to read it. And so that has kind of become more the focus, was teaching people how to read market profile. But then a new sort of thing started happening where more and more people started reaching out to me through like direct message on social media and stuff like that, and asking me like questions about their own trading styles and telling me about what works for them and doesn't work for them and so on and so forth. And then I kind of realized that market profile is great and it's a tool, and my way of trading is great, and I'm happy to share it with people, but it's really not right for everybody. Everybody is different. Everybody has their own things that work for them and doesn't, based on their experience and their psychology and so on and so forth. So now the channel has expanded more to just become a resource for traders to figure out their own system. And obviously right now I'm just at the very beginning of the process, but I should think if you were to come to this YouTube channel 5 years from now, what you will find is a plethora of content that is premium high-end content, not regular shitty YouTube videos that people just like sit in front of their webcam and say a bunch of stuff and then post it. I'm not going to make content like that. I'm going to make premium, like good content, like a documentary type of thing. So I'm hoping 5 years from now, if you come to this YouTube channel, there's a plethora of high quality, well-made content that any point in the process that you're at as a trader, whether you're brand new and you've no clue, or you've been at it for years and you're just trying to get better or learn a new skill or whatever, that this could be a resource for you to come and get that education. And so the idea is the YouTube channel becomes the free way to share that education and that content with the world. And so then I've created the website, piratetraders.io, and the membership, so that people can pay $10 a month to be a member of the community. And then that's the money I can use to pay for creating the content for the YouTube channel, right? So we've been at it less than a month. Things are going well. We've got over 100 subscribers. So pretty stoked. Normal, yeah. The reason I don't trade options is because they confuse me. I'm not good with all the Greeks. I just don't understand it. I will occasionally buy a call or a put for like a swing trade that if I think like the market over the next 3 or 4 days is going to push higher, I might buy a call, but I don't buy any spreads. I don't buy anything like that. Just like a single call option or put. And I do it usually with the MES instead of the ES because it's much smaller premiums. Okay, so right now that one-time framing is holding. This is what's so crazy about the fact that you need the 2 ticks to be the cessation of the one-time framing. Technically, this market is still trending higher here. Tick starting to recover. I don't know. Those momentum buyers, they're piling on here. They're really desperate to push this market higher. Let's see if they can do it. Yeah, Marco. Options is one of those things I tried to dive into it a year or two ago. And I realized I was like, this shit is magic. And I can't wait until I learn it and master it. But at the moment, I need to just set that tool aside and just focus on reading markets and trading futures. And then add complexity onto that after I've mastered that. Okay, well, like I said, I don't trust one time framing anymore for the first hour of the day because so many times lately it's trended one direction for an hour and then the other the rest of the day. But I will trust this trend now that it held in the C period. And so I will assume that the market wants to push higher until the D period gets 2 ticks below the C, which it's going to do right now as I'm saying it, of course. Okay, potential support for the market for the NQ here on the 20 moving average on the 15-minute candles. We're about to butt up right against that. Let's actually take a look at the NQ on the profile. Okay, definitely rotational. So once again, I'd say the NQ should find support, above the A period low. If it doesn't, if at any point today it starts to trade below this A period low, it is no longer rotational and likely trending down. Okay? So keep an eye out for that. As of right now, it still looks rotational. And again, potential support on that 20 moving average, which is like right here. Real close. Okay, so there is the break of the one-time framing, making the market rotational. Dun, 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 dun. Okay. So now what are we looking at? We got a rotational market. So exactly the same as earlier this morning. I'm looking for support in here. Okay. The first level is going to be this node of volume where we found support in the A period. The next level is going to be the repair of these K period single prints. So getting back to the base of the spike. And then so on and so forth down. I mean, there's a million of them from yesterday because there was such weak structure yesterday. So you got the node of volume around the POC, 42.28-ish. You got the halfback down at 42.25. You got just below that the D period single prints. Any of these levels could become support, short-term support here intraday. Wherever I think the market is finding it, I will go long for a rotation back to the POC. So I was saying earlier, if we came down here, I'd be going long for a trend higher for continuation to new higher prices. I now see this as a look above and fail, which is a signal that the market wasn't ready to go above yesterday's high. And so I assume we're going to rotate inside yesterday's range. So now I'm looking for support so that I can rotate back up to the POC. But once we get there, I take profits and I start over from scratch. Because once it gets back to the POC, it can go above, below, over and over again. Okay? Because it's rotational. So the first thing, there's going to be a pullback. And like I said, it'll probably be harsh. And it'll probably be a little bit like a liquidation. Because so many buyers were trying to buy in here to push that trend higher, they're all going to get squeezed now. As they're watching the price fall below there, they're watching the price fall below the A period low, they're going to get squeezed. So the tempo is going to pick up. It'll fall very quickly, but whenever it finds support, it's likely to rotate back to the POC. Okay. Both indices pushing through the 20 moving average is bearish. And by the way, Trading Donkey's not with us today, but this is one of those times, man, where it trends one direction for the first hour and then boom, heads the other way. Sneaky, sneaky market. So Kathy, I missed your question. What would be the target if we stayed bullish? If we had stayed bullish, it would have been the poor high left behind on the 15th. But now that we had the cessation of one time framing, like I said, I no longer think the market's trying to go up to these prices up here. I assume it needs to rotate. It needs to balance and get some acceptance of these higher prices. So I do believe the market is now rotational. Sri, just doing the full stream today. I try to do it at least once a week on the YouTube so that new people can discover the channel. Malcolm, another great analogy with the old baseball analogy. I agree. Ronald, thank you, brother. Appreciate you. Well, Nirmal, I haven't talked about selling at all today. I've actually only been talking about buying. But to answer your question, if I had been talking about selling, I am a short-term trader. So even though the overall trend of the market is bullish, I'm only looking for a trade to last me the next hour or two. So I only care about what the market is doing right now. Right now, like, so you have to understand this concept of balance and excess, right? Markets can't just go straight up forever. It's impossible. They can't do it. So the way that markets move higher is through a process called balance and excess. So the market spends some time jumping around. This is called balance. And then eventually it breaks out of that balance and it moves to a new place. And then it balances there. And then it moves to a new place and it balances there, and so on and so forth, right? That's how the market moves up. It doesn't go in a straight line. So what I'm thinking today is going to be, because we got that cessation of one time framing, is it's going to be a balancing day, right? Sorry about that. So in this process, the market moves higher, it balances, it moves higher. We are here. Or probably more appropriately, we're like here, right? So we just had excess. The last couple days have been the excess that pushed us up here. Now we need to spend some time balancing. Okay, that's what a rotational day is. So if the market is going to do that, if it's just going to bounce around in this area, the rest of the day like this, why would I only go long? Right? I can go long here, take profits here. Go short here, take profits here. Go long here, take profits here. Go short here. I don't need to keep doing this. You get the idea. Why would I miss out on all those trades? Right? I know the market's not going to go all the way up here because we're rotational. So I love going short. And we've had all this support. I mean, let me pretend I did not just say that. Once we find support below, which we're currently in the process of looking for, then it would be a great long trade to come back to the POC, right? So next potential support is either the base of the spike here at 42.32 or this area right below where there's this volume node with the POC. So that's going to be anywhere from 42.30 to like 42.27. Okay. Jimmy Woo. I love Jim Dalton. But yeah, I know what you mean. I prefer to watch Jim Dalton videos not live, but later so I can watch them in double speed. Um, yeah, so Kathy, the idea is I don't get bearish or bullish when I think the market is rotational. The only way I would get bearish now is if we broke out of the rotation to the downside. Today is not a good example to try to explain that conceptually with the ES, just because there's so much weakness. Like the last few days have just been such random days, right? Like the number of times I've seen a triple distribution like this, like I would say in the last year, I've seen like 2 of them. Like we're just in a random moment right now where things are a bit tricky. So trying to explain a simple methodology in a complex environment is very difficult. But the point is, we can literally find support anywhere down to the C period single prints, and I will assume it's just going to rotate back up. Getting down below this area, that would be where I would start. Now, I would go short. I'm not saying I won't go short, but I'm saying I would get bearish if we got below these single prints. Okay? Essentially, if we got into the range from the 21st, that's where I'd get bearish. Until then, my assumption is rotation. I'm neither bearish or bullish. I'm just looking for support to push back to the POC. Good question, Dave. So some of the differences between market profile and volume profile, obviously this section that I have over here on the left, that is basically just volume profile. That's what that is. But the slight differentiations are the POC. So when you're using volume profile, it'll show you the volume POC, which is the level where the most volume traded. But the way I have my software set up, the POC is where the market spent the most time. It's a subtle difference. As you can see here, they're only a few ticks apart from each other, and that's pretty normal. They're usually pretty close. But Jim Dalton has just found that time is a more reliable measurement than volume. The reason is because volume is constantly in flux. It's constantly changing. Some days, a lot of contracts to exchange on a certain level might be 2,000. Other days it might be 10,000, right? Like there are days where the market just has more volume participating on those days than others. So it's hard to use volume as a measurement for the success or failure of a move. Or not the success or failure. That's not the right way to explain it. Anyway, time is constant, right? Time never changes. 30 minutes is 30 minutes every day, no matter what. So if you're measuring off of a constant as opposed to a variable, you'll just get more consistent results. So that's why we use time instead of price to measure the success or failure of what's going on in a market. Okay. Also a difference between just using volume profile on regular candlesticks and the market profile software is that you get to see how much time the market spent at each price level, right? So if we look at yesterday's trade, we can see just looking at the candles, yeah, sure, look, the market spent a bunch of time at this area right here, right, around the 42.39 level, right? Spent a bunch of time there, but it's hard to tell where in that it spent the most time, just looking at the candlesticks right now. Was it here? Was it up here? Up here? It's hard to tell. But if I look at this chart, I can see instantly where's the most letters going across. Boom, it's right there. I know the exact level. So that's just the kind of benefit you get from looking at the data three-dimensionally. Yeah, Pugpack, I know you mentioned that to me before. I just don't really want to make any changes to my software. It's, it's funny because whilst I love it, I appreciate that people do it. It does make me laugh the fact that like every single day I get emails from people who are like, "Hey man, you should change this. You should add this. You should start looking at this." Blah blah blah. And it's like it's so funny because it's like these people don't seem to understand. That's what I used to do when I was losing money. I used to just every signal somebody say, "Oh, look at this, measure that, use this indicator, that tool, this software," and I just keep jumping from one thing to another to another. I have found that my personal success in trading has come from stopping that. I stop constantly looking for new things to learn, and I instead focus on mastering one simple thing. So another way to describe it might be to say, like, I'm sitting here learning how to play guitar, and you're listening to me play guitar, and you're like, man, you're such a good guitar player. You should learn violin. And it's like, violin is great. It's a wonderful instrument. I hope lots of people play violin and love it. But I'd rather just keep playing the same guitar, the same wooden box and 6 strings for the rest of my life and just get better and better at doing it. So right now, the way I have my system set up, I'm happy with it. And I'm just getting better and better at working with this tool the way it's set up rather than constantly trying to change it. Well, what if I change this? What if I add that? What if I start looking at this? Because all of that will just make me have to start over the learning process. But I do appreciate you guys giving me the heads up. Keep sending those ideas. It's just don't be upset if I don't try them because I'm just trying to master what I currently use. Oh yeah, PugPack. It's amazing what you can do with this software. And I do see other times on Twitter, I see market profile traders who use Window Trader will post stuff and I'll look at their chart and I'll be so jealous. I'll be like, man, that's awesome. Like, I wish I had that on my chart. But I've just learned that then when I add it for the next week straight, I can't trade. I'm confused. I'm like, what does that mean? It sends me mixed signals. So better to just stick with what I know. If it ain't broke, don't fix it. I've been using Market Profile a little over a year. Well, I've never used the monkey bars. Anytime I've tried to use an alternative to the window trader software, it just annoys me. You can't start with the best and then go to crappier stuff. Um, so I don't have an opinion on monkey bars, but I will tell you there are traders in this community who use them and are happy with them. Okay, so there's your first support and push back into the value area. Once you push back into the value area, if you're long here, I often put a stop just below it, but it does increase the odds that you're going to push up to that POC, which is currently at 42.40.50. And once it gets back to that POC, the auction starts over from scratch, so it can go up or down from there. Okay. Well, I'm happy to be the calm voice of market-generated information. Yeah, that was another part of the process for me, learning to relax while I trade instead of being all worked up and screaming at my computer. Nav Trader, why is the selling that's happening now not liquidation? It's a good question. I thought we were going to get a little bit of a liquidation break, but that's just a further sign of the buying appetite in here. Okay, so the market is bullish, and it wants to accept these higher prices, but it just wasn't quite ready to go to even higher prices from here, right? That's what the look above and fail signals. We tried to go higher, and it was like, nope, not ready for that. But that doesn't mean it's the end of the world. It doesn't mean we need to sell off. We'll just balance. We'll rotate. Looks like those 20s ended up acting as support after all, even though it looked like it was breaking. Pulled back up above them before the candlestick closed. Ticks breaking their downtrend in the NASDAQ. So yeah, it's feeling rotational. I would guess that we need to rotate down a little bit, though. At the very least, to backfill the K period single prints. right, so the market pulled the POC lower here in the E period, and that brought the POC down to price as opposed to price pushing up to the POC. But as always, on a rotational day, whoops, going to ruin those support resistance levels. On a rotational day, once you get back to the POC, the two-way auction starts over again. Could push higher, find resistance, or it could push lower to find support. The market remains rotational. Looks like the NQ still holding up on that 20. That looks good. Dip just a little bit below the A period low. So it is rotating down, but it is still rotational. Yeah, all in all, so far, this just feels like acceptance. It just feels like the market is accepting the excess that pushed us up here, and it's going to spend as much time as it needs to before it's ready to break out. Chris, just to give you a heads up, the 80% rule, that is an old Jim Daltonism. When I took a course with him about a year ago, he clarified that he no longer uses the 80% rule because it doesn't work with the same consistency that it used to. If you guys are curious, for anybody who's read his books, give me one second here. There's a link to the website. I just made a little post. Yeah, Mediterranean. No, we've talked about this before. If you're still using old things from Jim Dalton that he doesn't anymore and they work for you, great. Keep using them. I'm all for it. I just want to let new traders that are learning the system fresh know that Jim doesn't teach that anymore because he doesn't find that it works consistently. But anyway, I just posted that link. That's just to a blog on the website where I list out those things he said he no longer uses, which you will find in his books if you read them. But they're all over a decade old, so things have changed. So the things that he's ditched is the initial balance, the 80% rule, range extension, TPO counting, opening types, initiating versus responsive trades, merged profiles, and 3-1 days. Okay. So those are just the things that Jim himself invented and then Jim himself observed weren't working anymore. And so he has discarded them. Pretty much what Jim has done throughout his career is just simplify. He more so than inventing new ways of looking for trades and analyzing the market, he kind of has just over the years looked at less and less and less things and really simplified it down. There you go. Mediterra, if it's working for you in that way, that's awesome. Keeping you out of trades that you would have lost. Yeah, Daniel, that's a perfect example. So initial balance works for you, but on the larger initial balance days, right? So you haven't just taken the rule as Jim wrote it. You have taken it and then used your own personal observations to change it and to then trade with it slightly differently, right? And that's exactly what you should do. John, I assume you meant 42.39. Probably would not be a very good play to go short at 22.39. Likely to find support above that level. Nor auto trading. So Norway is like Alaska. You guys have sun all day long part of the year. Bummer, man. But cool. Enjoy the rest of your day. Enjoy the food. Enjoy the friends. Thanks for stopping by. Yeah, I will admit, guys, I'm thoroughly disappointed with the market this morning. I thought today would be a good day to stay live on the YouTube all day because I thought it was going to be exciting. And it looks like it's going to be boring. So, same MO as the rest of the day. We're just stuck in rotation. We need to break out one direction or another to get any sort of hyped movements here. Otherwise, we're likely to just keep drifting above value and below and then rotating back. Mediterra, what market profile room were you in? I've never heard of a market profile room. I thought I was the only one. John, now you did just short the market a minute ago. So is your prediction coming out of hopes? I mean, this all just feels very rotational to me. So I think if we do push much lower, we find support and rotate back up. Pavel, yeah, let's jump over to the NQ. Veach is also rotational. Yeah, this looks a little more bullish than the ES. Value is completely higher than the previous day. But it is still in rotation. So when the market gets above the value area, which is at about 14,294-ish, look for resistance, and then a rotation back to the POC, which is at 14,282. Okay. This is a very subtle thing to notice, but you can see, obviously, the overnight was rotational at slightly higher prices, right? So is the NQ today. It's rotational, almost identical to the overnight, but just slightly higher. So there's just a little bit of bullish sentiment in there continuing. Back to the ES. JPJ Trading. I'll have to check it out. Is it still around? Mudra, no, today's a great day for trading. Rotational days are among my favorite to trade because it feels like it's less risky, right? Going short above the value area up here is a less risky play because the fact that we're rotational means odds are we're going to push back down, but it also means we'll know we're wrong if we get above this high. So anywhere in this area, if the market pushes up into here, is a very good short in terms of risk reward, right? You only have to risk up to this high for the potential reward of the rotation all the way back down to the POC. Okay. Same thing below, right? If the market starts to trade down into this area, down here, you can go long with a much higher probability that the market will rotate back up to the POC. Okay. And you can just put your stop loss below the single prints here, a couple ticks below right down here. So you're just risking this much to make this much. I hope that makes sense. It's just boring because you can't, or at least I don't. I should say you can do whatever you want. I don't just put limit orders in here and walk away. I like to visually watch what's happening with the market and then enter, at market when I'm ready. So it just means you have to sit here and watch the market grind all day long, and it's just very boring. But there are lots of opportunities to trade. Kathy. So Kathy's question is, do I think that holding a micro or two to the all-time highs is a possible or is a profitable strategy? Okay, how do I answer that question? So in terms of probability, yes, I do think there is a very, very high probability that the market will trade up to the all-time high at 42.58. Now, the reason that I believe that is because that high was made in an overnight market. And every single time throughout the entire history of the S&P 500, if an all-time high is made in the overnight, it is then later repaired in the regular trading hours. So just the fact that it's happened every single time always makes me feel like there's good odds that it'll happen again this time. But where it gets tricky is the market doesn't have to go straight there, right? So let's say right now at this moment, you're thinking about entering, an MES contract long here for the push up to that all-time high. Well, what if the market pulls back? How far are you willing to let the market pull back before you exit out of your trade, right? Let's say you're going to say the D period single prints, right? I'll stop out below there, okay? So that means you're risking this much, okay, for the potential reward of this much. So what you have to ask yourself is, are you willing to risk losing this much money in order to make this much money? I will agree with you right now that the probabilities are in your favor that this trade will work out, but you could lose this much money, right? So for me as a day trader, this is a horrible trade to get into. There's too much risk. But if you were a swing trader, this would be a great trade to get into, right? So it really just depends on your personal trading style and, how capitalized you are and the time frames that you trade in. I wouldn't take a trade long now for the all-time high if I was a day trader, but I would if I was a swing trader. Bull Bear Rider, what is meant by rotational days? They are days where the market is balancing. So I talked about this earlier today. Markets don't move in a straight line up. They move like this, right? That's how markets move. So the areas where the line is going straight, that's called excess. The areas where it's crossing over itself, that's called balance. So this is what the market does. It constantly moves between excess and balance, right? So, whoops. Okay. So over the last couple days, with this incredibly bullish move that we've had, we've created a lot of excess. All of this in here, these single prints, is excess. Okay. In here is excess. And so when you have all this excess, eventually you need balance. You need to balance it off. Okay. There's two ways you can balance it off. You can have excess that pushes you up to a new high, and then you balance by just staying up at that higher level. We call this finding acceptance at a higher level, right? So the market just kind of trades around in here as long as it needs to. Could be a day, could be 4 days, like who knows, right? Trades around in here as long as it needs to, and then when it's ready, it breaks out of the high, boom, and then it continues higher from there, right? Or the same to the downside. It might bounce around in here and then come down. It doesn't find support, and then boom, it heads back down again. So that's just the conceptual idea of excess and balance, right? So what you're seeing so far today is balance, right? The market created the excess over the last 2 days. Now it needs to balance that off. And so a rotational day means the market's not really going to go anywhere. It's just going to go up and down and stay in this area. Yeah. Normal, if you just go to, you're in the private group. So if you just go to the Discord and then you click on MP software and settings right up here at the top, I got a link to where you can sign up for the software and the directions. And then right here is my template. So once you buy the software, you download it, you connect to your data feed, you literally just, I think it's like, yeah, you just go like, oh, no, it's right here. You click this little open button, and then you just, add that template from right here. And then your profile will instantly look like mine. Very interesting about the former market profile trading room. It's interesting that there wasn't like a, you create a vacuum, right? Often something else comes in to fill that vacuum. Am I what the universe created to fill that vacuum? Who knows? Chris, you don't execute trades on Window Trader? Correct. No, I use Trading View to execute my trades. Well, Mediterra, you know what you got to do, right, bro? You got to go back into that room, get back into that Discord, and send them a link here. Spread the love, brother. Oh, well, Mediterra, worth a try. Worth a try. All right, let's take a quick look at the NQ. Looks like it's pushing towards the lows here. So previously I had said I would look at the A period low as a potential breakout, but because we found support so quickly below that in the D period, I would now consider that actually the overnight low. So if the market can find some support between, this is the NQ I'm talking about, between where it currently is and that overnight low at 14,238, then that would be considered good support for a rotation back to the POC. But if you start to get below this low here, particularly if you push below and then come back up and you find resistance and you can't get back up into the value area, that's probably a good short for a breakout to the downside. That's catching my eye just because both indices simultaneously just broke that 15 moving average, which could lead to, looks like we're getting a bit of liquidation here. Back to the ES. It's worth noting, though, still an uptrend in the ticks. To get any real downside continuation, we need that one big red tick that breaks the uptrend. Could be what we're getting right now. All right, so we are now looking for support here on the ES. First potential level could be the base of the spike, 42.32, if not this node of volume just below it. Well, it already got those. It repaired those weak L period. Okay, so now that you're below the overnight low, you're looking for resistance. If the market tries to push up here again and it can't, this is a breakout from balance to the downside. Okay, so you could short that for further downside continuation. I'd first wait for the resistance, though. Like, you only got 47 contracts and stuff here. Let it push back up and try to get back into value. And if it fails, then you know it's a short. Okay. Yeah, it did it in the K as well. It's just a matter of understanding like balance and excess, right? Like I talked about it earlier, there's two ways when you create this excess, there's two ways the market can balance it off. It can either stay up here at higher prices and just rotate around, or it can pull back down to lower prices, right? So I'm not too worried about individual repairs of little things here and there. I'm more asking the bigger question, is this market going to rotate at higher prices, or does it need to sell off back into some of this excess? Then if it is, then I'm looking at single prints because there's some excess that needs repair. You got some single prints left behind from 621, right, a couple days ago. So it's like, first, I just need to answer the question, is the market just rotating at higher prices, or is it now trending down in need of repairing these things? To me, we're figuring that out literally right now. If it finds resistance here, it can't get back up into this value area, then it's probably the sell-off, right? The market needs to repair that by going with price lower. But if it's able to push its way back up into value here now, it's still just rotational at a higher level. Okay, it's still finding acceptance. Okay, so one tick above that potential support. Yeah, Salmon River. That is the definition of rotational. Yes, sir. So again, it's just that concept that I talked about before of when the price pushes higher, it either rotates at a higher level or it pulls back down, finds support, and then pushes back up. So this is just a sign that it's doing the rotation higher. Okay. Also, another way of thinking about it is that this little liquidation that happened in both the markets, it wasn't new money selling, right? It was just people who've been going long all morning who got frustrated. Easier to show on the ES, right? People are going long, they're going long, they're going long, and then they finally just give up. They can't get above the POC in any of their attempts, so they finally just quit, exit their trades, causes a liquidation. But because there isn't a larger appetite for selling in the market, they dry up very quickly. Okay. So that's all just normal rotation. All right, Malcolm. Yeah, I think that's a good trade. And I think you'll do all right. As for the intraday thoughts, we are about to push our way above value once again here in this rotational ES market. So I'm looking for resistance somewhere above the value area, this blue shaded inbox, and below this B period high. Anywhere that we find resistance in here is shortable for rotation back to the POC. Well done, Chris. Good to hear, brother. Now you look for one in the opposite direction, right? You look for that resistance and you go short to the POC. It's as boring as can be, but it works. Sorry, guys, I stepped away for a minute there. I'm just jumping back in and reading through the chat. Okay, so Nav Trader's question was, and great job answering it, by the way, Salmon. I appreciate you. Nav Trader's question was, once the market goes rotational, how do you recognize that it's trending out of that rotation, right? Like, it can't go rotational forever. At some point, it's going to break out. So how do you know when that point is? And he was asking about one time framing. Now, what Salmon River said here is, to him, once you have 3 time periods in a row, that's the market one time framing. I don't look at it like that, but I also recognize that I'm not good at this. Recognizing when a market goes from rotational to trending is actually one of the things I'm least good at. I have the most difficulty with. For me, it's just much easier to recognize in the actual breakout, right? So let's say right now you're looking at this and you're going G period, H period, I period, one time framing higher. Okay, great. I'm going to go long here, right? So you would enter your trade here. Market pushes up to the high, gets above, pulls back down, finds support, and then breaks out, right? I would get into the same trade. I would just get into it here. So I'm giving away the profits that I could have made from here to here, right? These profits are gone. I have to spend those sitting on my hands, waiting for the market to get up there and give me that signal. But I'm okay with that because it takes away the risk, right? It takes away the risk that the market might just push up to here and then rotate right back down, right? So by waiting and being patient, I am taking away the risk of being wrong, right? Okay, so that's one way of looking at it. The other way of looking at it is with the trades, right? So yeah, G period, H period, I period, one time framing higher. But if it gets up here and then it starts to find resistance, I can short it for the rotation back to the POC, and I only have to risk this much. So that much risk, that much reward, right? Much more reward than risk. So I hope that helps you understand my style. I'd rather be looking to go short in here because that's less risky of a trade, and then just get into the long after the breakout rather than try to guess that the market's going to randomly go long in here, where in my mind there is no, I have not noticed any statistical probabilities that that help me to make that decision. So like now that Salmon River has said he often pays attention after 3 time periods go one time framing within rotation. So maybe now I start watching that. And every day I see, all right, if we get 3, does it continue? How often do we get 3? And then when it gets above value, it pulls back in, right? Over time, I build that skill of understanding, but I haven't really ever looked at that. So not much to report as far as that is concerned. I know, don't jinx it, Salmon River. We're so close. The reason I decided to go stay on the YouTube all day today was I thought the markets were going to continue trending higher and it was going to be super exciting and I could bring in those followers, those subscribers, but not today. All right, well, Mediterra, there's a second opinion on the 3 in a row. So maybe I start watching that. Maybe I learn something new from it. Yeah, Malcolm. I don't make official recommendations for brokerages and stuff, but I will say I find the fees on futures with Thinkorswim to be ridiculous, um, particularly if you're trading the micros. But the good news for you is there's a million options out there. Man, this market straight up gone to sleep. Sleepy sleep. Wake up, market. Wake up. Um, would going short on the ES after the poor high is repaired be okay? Well, of course it'd be okay, bro. Do whatever you want. um, yeah, I can't answer that question now. I'd have to see what happens to the market when we get there, right? What is the market doing when we repair that poor high? Um, what's the volume like? What's the tempo like? How did we get up there? Was it a short covering rally, or did we just slowly grind our way up there? What's happening with the internals, right? Like every trade I take, I look at so many different factors. I can't really guess ahead of time what I'm going to see when I get there. But if I just had, if you put a gun to my head and made me guess, I would say no. It probably won't be shortable. Likely getting above that poor high will bring in more buyers who will be looking at that all-time high. So my guess is if we can get up above the overnight range, we'll break out. Akbar, welcome to the channel. Glad that you subscribed. That's awesome, Akbar. Yeah, we're happy to have you. It is nice having other profile traders to bounce ideas off of. I love it. People throw stuff out in the chat all the time that I find so much value in. Yeah, I actually just talked about this moments ago, but yeah. So my thoughts on breaking today's high, on getting above the B period high from today, is that if we are able to get above there, particularly if we're able to get above the overnight high, I assume that that will bring in more buyers who will target this all-time high, and then we get the sell-off, right? But that's just a guess. I mean, I could just as easily be proven wrong. I got to wait and see what happens when we get up there. But yes, to my mind, if, for example, if the market just rotates the rest of the day, say the closing price was right where we are now, and then the overnight market tonight pushes us back above into here, I would suspect tomorrow the regular trading hours would repair that. All-time highs that are made in the overnight are like a very powerful magnet for price in regular trading hours. Got a week J low, week J high once again. Jerry Ma, my favorite question of them all. The differences between weak and poor references. Okay, so these references that I'm pointing out here are weak references. Okay, I period is weak because it's at the same level as H. J period is weak because it's only one tick from I. Okay, same thing down here. J period is weak because it's at the same level as B, and H period is weak because it's at the same level as A. So these are considered weak references. What a weak reference means is that the market is more likely to come down and pass through it to get 2 ticks of excess, but it's not that strong of a signal, right? You can leave weak references behind, no big deal. I certainly would never, like for example, if I wanted to go long here, I wouldn't care that there's 2 weak references below. They're not that strong of a magnet. However, the more of them that you pile up, the stronger they become. So if I had 4 down here, I'd be more nervous. If I had 6, I just wouldn't even consider going long, right? So the more weak references you stack up, the higher the odds the market needs to go down and start repairing at least the first of them, okay? Poor references, though, which is the same thing. It's being less than 2 ticks away, but on the high or the low of the day, right? That makes it poor, not weak. That is actually a very strong magnet, but it functions differently than weak references. So weak references, they don't really push the market or affect the market at all when they're created. However, poor references often do. So let's say this was a poor low on the G period, which actually you could argue, but I won't. We'll say that's a good low. Let's say it was a poor low on the G period. You would commonly get the market pushing away first, and that's what's different about a poor low and a weak low. The weak low won't push the market away once it's created. The poor low will. And then the other difference is, like I said, the weak lows don't really matter, but the more of them you stack up, the more they matter. With poor lows, they always matter, right? As I said, every poor high that's ever been created in the history of the S&P 500 has always been repaired. and I would say probably 90% or more of the poor lows. So once you create that poor low, it's tricky because it first pushes away, but then once it's pushed away, it increases the odds it comes back. Okay? Sorry, there's no poor lows to point out here as an example. You just have to use your imagination. Oh, Jonathan. Your joke is a deep cut, my friend. It's a deep, deep cut. Also, for those of you that are new to the market profile, if I'm confusing you when I explain these things, I've started working on a glossary on the website. So if you go to piratetraders.io, and then on the top bar, you see resources glossary, and you just click on that. I'm writing out these things in written form. So like if you were looking for the difference between weak references and poor references, you could just click on both and read them. So people might find that. I don't really learn well from stuff like this where it's written out in text. I'm not a visual learner, but if you are, this might simplify things for you a little bit. So again, piratetraders.io, then resources, glossary. And I'll be continuing to add to this into the future. Weak and poor describe the flea. Wait, Jonathan, are you talking about the website? Now I got to pull it up again. That's the expression that you have when you go to a poltergeist? You know what this reminds me of? You see that little photo of that little girl looking back at the camera, and there's like a house burning in the background, and it's like she's laughing at it burning. That's what that reminds me of. This is the face of a guy who just farted, and he's the only one in the room that knows it. Good call, Phoenix. Yeah, from now on, whenever somebody asks about a Porlo, I should just post the link. That's actually a good idea. Jerry Mock, great question. So if the overnight creates weak and poor references, do I label them? I don't. I generally will look at poor references if it's a poor high or a poor low, but I don't even mark them on the chart. I'll kind of see it and I'll know it's there, but I generally focus more on what's happening in the regular trading hours. Yeah, Akbar, I don't do trade signals, so I don't call out live trades. I used to, and then I just found out I'm not as good of a trader when I do. It affects my own decisions to enter and exit trades. So I trade on my own, you trade on your own, and we'll just talk about the market. Oh, proctologist. Okay, that's a better joke. Sorry. Mackie Max, I'm dyslexic, so as soon as we start getting into acronyms, I'm totally screwed. I can't keep up. Design knob. Yeah, what should the official definition of the murder bot be? Only fake answers. Phoenix, that's true. It's not like my shit is complicated. You could probably guess what I'm going to say before I say it. Thank you, Fausto. Good to see you, brother. Yeah, I mean, Akbar, essentially, if you pay for the membership, you get what we're doing right now all day normally. Normally, I only do this for the first hour of the day on the public YouTube like this, and then you need to be a member to do it the full day the way we are right now. And of course, you're welcome to jump into the chat and tell me about your trade, and I'll give my opinion. But of course, that's all it will be, is just an opinion. I certainly don't offer financial advice. But yeah, always happy to offer my insights, as will the rest of the chat, right? Once you get into the Discord, you can jump into there and be like, hey, just went long this level, and other people will respond and give their feedback as well. The unleashing of algorithms. Like they're just like sitting there all day, just like blood dripping from their teeth, just waiting for them to be unleashed on the market. So, Fausto, is that you asking me for my opinion on your trade? Yeah, I think it's good. You said you came in at what? 42.40 was your average? you mentioned. I mean, you're right at the POC in terms of intraday, but yeah, I mean, if we don't get any kind of crazy liquidation in the M period, which I don't sense we will, the overnight market should push higher or balance, rotate in the same area. But I can't make a guess till after that murder bot does its work, because who knows what that murder bot will do. Yeah, Jonathan, technically you're probably right. Almost all the trading that takes place on the futures markets is computers in terms of the volume. A lot of it is arbitraging computers, right? People buy the underlying stocks. They start to increase in value, so the computers buy up the ES to match it, stuff like that. Lots and lots of computers. Uh, Nav Trader says, I know you say you don't trade the overnight, but do you notice a connection with the after hours trading and the previous day? And to answer your question, no, I don't. I don't watch the overnight, especially for the first few hours. Sometimes I jump on like before I go to bed at night at like 10 or 11 o'clock and I just look at what's happening with it. But I don't watch it the way I watch the regular trading hours, so I don't know. I will tell you there is something very commonly called the counter auction that happens from the overnight to the regular trading hours. So if a bunch or if a majority of the trade is in one direction, which of course it wasn't last night because it was rotational. But let me go back and find an example where it does. That be rotational. There you go. Okay. So on a day like today, the overnight market opened here. Okay. And then it closed all the way down here. So we know that a majority of the traders went short, right? There's a buyer for every seller, a seller for every buyer. So for the price to move from here all the way down to here, there had to be more sellers than buyers in that market. Does that make sense? So when you get something like this, where a majority of the market is traded in one direction, in this case short, you often get what's called a counter auction at the very beginning of the next day. Okay? And so let's jump into this profile and see what happened. So obviously we don't know directionally how it happened, but probably that's what took place, right? Expand out this profile. So the market opened. It had a counter auction to that. So the overnight inventory was short. So we had a counter auction to the upside. But then as soon as we ran out, so you could consider that counter auction, like, why does it happen? Who knows, right? Probably because these people are taking profits or something, you know? But anyway, whenever that comes to an end, the counter auction is over, then the market trends down the rest of the day, continuing the larger trend that was happening. So counter auctions from overnight to regular trading hours, very, very common. Fully tradable events, but I don't know of any from regular trading hours to overnight. Skater LA? No, actually, I don't want to do that with the ticks. I have set this up like this for a reason, because the ticks are distracting to me. This is easier. I like to just look at the ticks for a second and then get away, because if I stare at the ticks all day, they distract the fuck out of me and I miss trades. So all I want to look at most of the time is the profile and this 20 moving average. And that's all I look at. And then when I need more information, I click over here on the internals. But that being said, you should just throw up a couple ticks on your own screen. You know what I mean? Those are, you don't have to pay money for these. You can, any brokerage software will give you those. Yeah, Kim, that's true. Very boring, very muted, and often on days like this, I just have to remind myself that when this happens, when the market is getting super quiet, it's actually like a spring getting tighter and tighter and tighter, and getting ready to break out. You and I are not the only two people that are bored and apathetic right now. Lots of other traders are just waiting for a signal so they can jump into a trade. So whenever we do break out of this, it will likely be with a bit of force. Akbar, no, I don't trade the overnight. I just trade during the regular trading hours, the New York hours. Nav trader, yeah. What I meant by that was, of course, at any moment, the market can do three things: go up, go down, or go sideways. So what I meant by that comment was, I don't think the overnight market will need to come back down into these lower levels. They didn't need to last night. So if we didn't need to either, we've created a higher low here. It probably is evidence that the market is happy with these levels, right? It doesn't need to pull back. It's accepting these prices. So if it's accepting these prices, my assumption would be the only two options the overnight can do is either rotate further sideways or push higher, right? Because they just don't need to come back down. If they needed to, they would have here, or we would have here. Jonathan, is that true? Are you guys back to masks and stuff? Well, at least your citizens are listening, so it'll be over soon. Okay, another weak reference in the K period low. Awesome, Kim. We're happy to have you. Welcome. Yeah, Kim. Um, I'm not familiar with that particular company, but yeah, just kind of Google different ideas for market profile software. There's a lot of them out there. You also don't have to buy it right away, right? Or get it right away. If you've subscribed to the stream and you trade the ES anyway, you got mine to look at every day, at least to kind of learn it and understand it first. As far as trading VWAP and pivots, my advice is if it's working for you, if you're profitable, don't give up on it. Keep working at it. And then look for ways that the market profile and the things that I talk about can supplement your trading strategy. But if you are not profitable, if trading the VWAP and the pivots is not, a consistently reliable system for you, I would encourage you to consider the idea of looking at something else. I traded with VWAP for years, and then I heard somebody asked the question in a webinar with Jim Dalton, like, hey, what do you think of VWAP or whatever? And Jim Dalton's response was like, well, I figure if it's working for you, you wouldn't pay me thousands of dollars to come take this course. If you did, maybe try giving up on it and trying this instead. And that's when I was like, ooh, fuck, that's right. So if VWAP and pivot points are working, keep using them. If not, at least consider the idea of simplifying your strategy. Well, then you and Jonathan are, soulmates? Soulmates, not the right word. Country cousins? I don't know. Why, John? John, I'm sorry, brother, but that joke fell so flat. I'm so confused. Okay. Well, there you go, Jonathan. It wasn't a joke. It was a real statement. Well, that's cool. I found something really interesting that I was listening to Powell talk one time. This is a while ago. And he was talking about inflation. He was saying if 2% is the target, they actually need to let it go above that because it spends so much time below 2%. You know what I mean? It spends so much time at 1 point something percentage that if they're looking for 2% as an average, they have to let it go above 2% in order to average out. And I was just like, oh, fuck, I never thought about that. Good thing I'm not in the Federal Reserve making those decisions. Um, Tiz Tums, sorry, I can't say that name. His question is, if we had the trending day yesterday and now we're having the balancing day, does that show acceptance of the push higher? And the short answer is yes. We are seeing acceptance of higher prices here. but in my mind, it won't be official until the market closes. Just in case we get one of those M period sell-offs that turn into a liquidation. But yeah, if we end the day up here, it is acceptance of higher prices. John, that response was so clever. You actually lost me for a second, and then I got it. I was like, snake-like? What is he talking about? Snake-ish? And then I realized, rotational. Yeah, so Kim, you're more than welcome to talk about anything you want in the chat. If you want to mention other indices and stuff like that, other than the ES and the NQ. John's just letting you know that we don't often talk about those things. Most of the people here are ES traders. There's a few NQ traders. So I often won't respond if you mention something in the chat about one of the other indices. But of course, you're welcome to talk about it. And if anybody else is interested, they will respond. But I just generally try to keep it to NQ and ES because those are the ones I know well. But yeah, Bull Bear Rider, to answer your question, are we bullish or are we bearish? We are neither, right? The market is rotational. We have good excess above, good excess below, 2 week references above, 3 week references below. So, and we're sitting literally right on the POC with absolutely dead tempo. So what does that tell us? Literally anything can happen. The market can continue to rotate. It can push higher or lower. We just don't know. But I reckon we'll find out in 25 minutes when that M period prints. Well, sometimes we get lucky and snoring Homer brings the market back to life, but not today. I know, it's crazy, right? And it's not even just that we're like inside the opening range. It's that like the overnight, look at the overnight and then today. They're almost identical. Look at the TPO for overnight. It's just like a couple, maybe a buck lower for today's session. Biggest node of volume is just a little tiny bit above our biggest node of volume. They're just a little bit bigger than us in terms of the size of the range, but like almost precisely the same in terms of the shape. Both beautiful bell-shaped curves. So that's a sign of rotation, which is bullish, right? Because it's acceptance of these higher prices. But the long and the short of it is to say the market hasn't gone anywhere since the close of yesterday, let alone the open of this morning. Just another nuance I missed. Our closing price, just a buck or two lower than their closing price of the overnight. So they went nowhere as well. Bro, Jitten's got his crystal ball out here. Sounds good to me. Okay, now that L period low is also weak. Thank you, Algo. Good to see you again, brother. Fausta will be happy with that. And what a great transition, Flea. All right, guys, we got 5 minutes to the M period. So if you want to jump into the chat and start hitting me with your guesses for where we're going to close today. If you're new to the channel, something we do for fun every day. We make a guess at what the market price is going to close at 30 minutes before it does. Just because, why not? Life's short. Yeah, that's interesting, Kim. It's the same thing that happened to me with Jim Dalton. I was taking my first class with Jim Dalton, and he started talking about, which of the books was it? One of the habit books. And I was like, oh man, no one's read that book, but I love it. I'm obsessed with it. So I was just so excited that he was sharing that. And it was one of those first clues that we might think alike. All right, we got 42.48, a little push higher. 42.46, another person seeing us push above the high. Well, Phoenix on this YouTube, on the public YouTube, is just for fun. It's science when we do it in the private chat, okay? Philip sees a push to 43.75. 43.75. And then pull back down to 42.37. I get it. Typo. Oh man, yeah, Kim, you're gonna love that book. It's dense though. That's one I had to listen to on audiobook because I just couldn't get through reading it. Yeah, that would be quite a whipsaw, Philip. Bull Bear, is that Spy that you're looking at? Pugback 42.46. So everybody seems to think the market's going to push higher in the M period. I will, of course, guess the POC at 42.38, 39, 42.39 as my guess, but I think we will either push higher or lower first and then come back to it. All bulls in the chat. No one thinks the market needs to spend another day rotating around this level. We're all ready for breakout. Okay, that end period high is weak. S is the L period. Weak, weak, weak. Weak hands selling this market. I said bulls, guys. I didn't say balls. Probably some balls in the chat too, but not all balls. Wasn't it Design Knob that called you a man yesterday too? Was that him? Boy, Design Knob's not doing well. Yeah, that's the sound of those murder bots just starting to growl. They're pacing back and forth in their cage. They're just waiting for that moment when they can unleash on the market, take us back to the POC. Sorry, Design Knob. Must have mixed you up with someone else. So, what the murder bot is when you hear us referring to that, We have figured out that there is a moment right at 10 minutes to close. So for me, that's 12:50, 3:50 if you're on the East Coast. Right at that moment, like literally the second that the clock strikes, it triggers a set of algorithms that often behave very rapidly and very kind of randomly. You know what I mean? And so the reason we call it a murder bot is because it's the bot where like you'll go long, put your stop down here, and then like the clock strikes exactly 12:50, and then boom, it like shoots down, fills your stop, and then comes right back up, and then it shoots up here, and then it comes right back down, and you're like, what is happening? We've essentially figured out that there's bots that trigger right at 12:50 that do that, and then there's kind of like another wave at 12:55. So it's like you get a bunch of tempo and volatility, and then it kind of slows down, and then 12:55 you get another push into the close. So we will see that today. I just don't know if it'll take us anywhere. Right back down to that POC. You know me. Yeah, I mean, people keep talking about this MOC imbalance, but I don't ever see any pattern with it. You know, some days they say the imbalance is long, the imbalance is short, and it still goes the opposite direction. So I haven't seen any pattern in that. Correct me if you guys have. It was designed off. Busted. Okay, Jonathan, this is the last time you goat me into this, okay? I'm not your puppet. I don't just sing for you. But for one last time, just because you asked. Are you down with the POC? Yeah, you know me. With the POC? Yeah, you know me. What? 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 Oh, it wasn't designed off shit. Sorry, misread that. Oh, it was Jonathan. Oh, okay. Placing the blame on the knob. Sorry, bro. I just assume if there's a troublemaker in the group, it's probably you. Yeah, Nick, you want to do a duet one day? We'll see if we can break some computers. Never been so excited for the murder bot in my life. Jonathan donated 10 because I'm down with the POC. Thank you, brother. Design knob. Don't you put that out there in the universe. Don't you do that. It's going to be a blow off top. I'm going to get to 1,000 and instantly I'll be at 1,200. That's what's going to happen. All right, Jonathan. Good seeing you, brother. We'll catch you tomorrow. 91 likes. There you go. The record is, I think, like 105. But that's pretty good. Thank you guys for the support. Bro, Kim, you got to be the first person ever who subscribed to the paid service before the free YouTube channel. Thank you, bro. Yeah, that is ineffective. The name does not keep anyone away. Okay, so it's not unreasonable to imagine if we break this weak reference that we have below here, we might get some selling, right? Some of the people that have been buying here get squeezed out of their trade. They've been buying at exactly this level for the last 2 hours straight. Okay, yeah, tempo picking up a little bit as these weak hands are getting kind of squeezed out of their long trades here. One minute to Murderbot. Cue the Murderbot. Okay, so did you see how instantly the tempo changed? Instantly we started to get all this volatility. It took us forever to push from here to here. And we pushed from here to here in like a second. That, my friends, is the Murderbot. Okay, creating a little poor low there. Okay, very little push away from a poor low, and an instant repair would be bearish. Well, it's taking long enough to repair it that I think that it won't be that bearish when it does. So there's a good chance if we get a few ticks below this poor low, we might just rotate right back up. Okay, cue second wave of Murderbot. Uh, Normal, yeah. I'm referring to it happening at least within the end period, the 15-minute runoff. But what it feels like, okay, so there's your 2 ticks of excess. So if the market finds support here, it could push back up. Looks like the NQ is holding up better than the ES here. Yep, looks good. Textbook day for trading rotation. On the Q. Okay, so it looks like we're bringing in some buyers here. Should get us back up towards that POC. Phoenix, no, we're not doing the spreadsheet on the days that we're on the public YouTube, just because it would be too many new people. All right, so let's see if the M period, N as in Nancy, goes higher or lower. But all told, this just looks like rotation. You know, they just pushed a little bit lower at the end of the day, a little tiny spike down, but not much to that. And there's a huge node of volume just below to act as support. So all in all, this looks like acceptance of higher prices. The two options that are most likely in my mind for tomorrow is either the overnight trade pushes us higher and we open with a gap, or we open inside today's range. Okay? Thank you all so much for joining me. I will be back here on the YouTube tomorrow morning. I look forward to seeing you all then. Thanks a lot. Bye-bye.